Right, we're now going to be checking in with the top management of HEG. We have seen the graphite bound stocks very much in focus. HEG right now trading down by about 0.5%. If you were to look at the last 6 months, the stock is down by about 40%. But it's important because what we've also seen in recent times is a big price hike that has been announced by the company. Joining us now is Manish Gulati, the CEO of HEG. Good morning, Mr. Gulati. Thanks so much for joining us here on ET Now. Now, we saw the price hikes of about 8 to 10% in the third quarter. But despite that, there has been margin compression. Is the market mature enough, ready enough to take another price hike? Is that what is going to be the plan at HEG?
Yeah. Good morning. You have seen the price hikes between the 2 quarters, but at the same time, our prime raw material, the needle coke prices have also gone up, besides other inputs like pitches and the freight cost. So all these input costs have been going up. But the good point is that we have been able to absorb that and maintain our margins. So going forward, yes, you will see another price hike between Q4 and Q3 of another 7-8%. And as I said, but the costs also continue to rise for us.
There are, of course, a lot of other global factors at play also, right? Like you see China, which has abolished VAT also when it comes to graphite, etc. So you're giving us some guidance that we can expect another price hike, again, similar quantum of 8 to 10% going forward in the next 2 quarters. We have in January seen prices of all kind of commodities, whether it is petting coke, whether it is crude, go up a lot more and maybe more than what you had envisaged. So this 8 to 10%, is that also going to be good enough?
Yes, this will at least help us maintain our margins, because with this, at least we can cover up the rise in input costs. You see, in this, when you look at our industry, we serve the electric arc furnace part of the steel making. Now, this particular segment is going to grow because with this decarbonization and these carbon credits and taking hold, a lot of blast furnaces are being converted to electric arc furnaces, mainly in Europe. And then there are new electric arc furnaces coming up to the tune of almost 20 million metric tons in US alone. So this is all going to increase demand for our product. So we have a very positive outlook for graphite.
What kind of utilization is HEG sitting on, and do you see that increasing in FY23?
See, we are working at 90% capacity utilization for the last 2-3 quarters. And in our kind of business, that's the nameplate capacity. Maybe we can squeeze a little more, but it's going to remain at 90 plus percentage. And in the next year, we expect to sell more out of some capacity out of our new expansion, and a little more we can squeeze out from our existing plant.
So for FY23, I mean, one is going to be in top line surge, which will happen because of price hike. But operationally, there is going to be no operating leverage because of capacity and because of demand surge. So even if demand remains strong, it's not that there is operating leverage benefits which would kick in.
See, as I said, our prime raw material is needle coke. So we are negotiating quarter by quarter, whether it's electrode prices, and back to back we negotiate the needle coke prices. So we expect the prices to remain firm and keep going up from quarter to quarter, but that holds true for needle coke also. And I will repeat, the good point I said is that we expect to be able to absorb all the input costs, rise in input costs, and pass it on to steel industry, because steel industry is doing very good, I would say. There was a brief lull in prices, but again started to firm up. So globally also, steel industry is doing well. And out of that, the electric arc furnace segment is even more favorably doing good.
Sure. But Mr. Gulati, just wanted to understand what's the long-term demand outlook? You've talked about the near-term for sure, considering that there's decarbonization, curtailed exports by China, and to top it all, rising steel prices in any case, are sort of having their bearing on the strong tailwinds for the entire graphite industry, not just you.
See, the electric arc furnace industry, whom we supply to, is definitely going to have a higher growth, much more than the total the blast furnace plants. So this is going to have a continuous increase in demand for graphite electrodes. And why this is happening? Because scrap generation is going to be increasing, because decarbonization is becoming stronger and stronger. All the governments are focusing on forcing companies to reduce the carbon footprint. So this electric arc furnace industry, everybody's looking at it. So this steel making, this share of EF is going to increase and increase. So we, in the medium term, long term, our demand the demand for this product is going to grow year by year.
So in light of that, what's your capex outlay for FY23 and beyond? And are you looking to up capacity significantly?
Yes, as we had announced, we are spending 1,200 crores to take the capacity from 80,000 tons to 100,000 tons. And that we are already the largest plant in the Western world. And that will, with 100,000 ton, it will definitely lead to more economies of scale and give us much more revenue. Out of this 1,200 crores, 700 crores has already been spent. And the expansion is going on in full swing. And we are confident that we will complete it by the end of this year, end of calendar year, December 22, and be ready to commercially produce by early 2023.
When you look at the steel market and when you understand your correlation, given that everybody is talking about strong capex, can I say that for next 2 or 3 years there is no problem in terms of demand and in terms of visibility, because the cycle is not going to be, Mr. Gulati, a 1 year cycle. This will be a 3 to 4 year or 5 to 7 year cycle.
True. See, if we have seen one strong year, 2021. In fact, this surge started from October of 20. So we've already seen one strong year, and 2022, we are quite confident it's going to remain strong. Of course, that global geopolitics, all this will keep happening, but we still think that 2022 is going to be a strong year for steel industry as well as for electrode industry.
Do you see your cash flows increasing, because that's some markets would like to price your stock at?
Right. Absolutely. The cash flows are definitely going to increase with increasing volumes, increasing prices.
And when you expand your capacity, you are only looking at internal accruals. You're not going to be going to bank to increase debt.
No, we are fine with the internal accruals. No problem at all.
When it comes to graphite, now graphite is supposed to be something which now we say is not very environmental friendly. While graphite goes in electric furnaces, which are considered to be eco-friendly, but the raw material graphite per se which you use is not very eco-friendly. How challenging is that for you because of the ESG constraints?
You see, ultimately, you cannot have it always. If you have to make steel, electric arc, if you make it via the electric arc furnace route, it produces 1/4 of the carbon dioxide the same ton would emit if you make it via the blast furnace route. And graphite industry, the graphite electrode is an essential product. You cannot do without it, and there's no substitute to it. Now, regards whether we are a polluting industry, I would vehemently say no. We are using coke, the ultra low sulfur coke, which comes from oil refineries. We are not burning it as such. And if you come to our factory, you have a look, we are meeting all the pollution norms. So it's not a polluting industry as such. In fact, these plants, graphite plants, you will see them all over the world, in most developed countries, in Japan, in US, and all over Europe. So I don't think so. In fact, we are helping the world emit less carbon dioxide, because we'll be making electrodes which go for electric arc furnace steel making. Steel is the biggest polluter in the world, by the way, when pollution is concerned.
Okay, so that's graphite, ESG. The demand, is expected to double almost globally by 2030. That's HEG's top management for you. Thank you so much, Mr. Gulati, for joining us live today on The Market.